Good morning, everybody. So £60 billion by the time it finishes. Add on another £77 billion. What am I referring to? I'm referring to the biggest support schemes that HMRC and the government have provided to employers and to the self-employed. Today, I want to go through a quick update in terms of what's changing for this month of July. It's the 1st of July today. It's a beautiful day. So let's go through some updates. My name is Mahmood. Some of you have probably seen me in virtual space, so apologies, I'm going to invade your space. Great topic to start off at 7:30 on a Wednesday morning. So the two main themes I want to talk about today are furloughing and the self-employed grant. For those of you who are coming back to this video later on, I think it's hashtag replay. This is my first foray into the LinkedIn Live universe. I've been broadcasting before on Facebook and YouTube, so welcome LinkedIners. You've got some details on the screen there, good old-fashioned TV ticker tape. So without further ado, let's just crack on and what we're going to do. Now, I've got a couple of slides to go through with you. It's not going to be death by PowerPoint, just to give you a framework. If you're interested in getting a copy of the slides, I'm going to do an arrow pointing downwards. Pop a comment into the comment box and I'll share the slides with you very happily. So let's crack on. Now, if this technology works, which I'm sure it will do, we have, by the power of magic, this. I go tap to the left-hand side. If you wish to add comments as we go through, questions, by all means, please do so. I think you're going to do that wonderful thing of giving StreamYard permission to participate, but that's perfectly able. Now, I'm just going to move this irritating little mouse here and let us begin. Now, there are two clear distinctive dates that we need to get comfortable with when it comes to furloughing, or two timeframes. We've got what's happening between the 1st of March when the scheme began up to the 30th of June 2020. So that was obviously yesterday. And the key things to remember when it comes to furloughing is, one, what it actually is. And furloughing is effectively employee hibernation. So when you're in a situation, you're facing that sort of turbulence of the pandemic, you have 2 or 3 options open to you as an employer. Number one, take that tough decision to lay people off. Number two, still retain those people on your payroll. Effectively, up until the 30th of June, the conditions were that the employees that worked for you had to be fully on furlough, i.e. they couldn't do any work for you, provide any services in order to be eligible. Other conditions, obviously, one should all be hopefully familiar with them, in terms of you've got to be a registered employer, you've got to effectively have filed an RTI return, as it's called, by the 19th of March. So again, those conditions are well out there in the ether. If you want to remind yourself about those, then obviously drop a comment, check out some vids, and it'll all be there. So prior, up to and including 30th of June, it had to be an all or nothing. Secondly, as a minimum period of time that person to be on furlough, it had to be a minimum of 21, and that's calendar days. That's a bare minimum. So if somebody's on furlough for 14 days and then comes back to work, that breaks the conditions and no furlough claim can be made. And by the furlough claim, by the way, it's effectively a grant that you're receiving, going towards either paying over to the employees directly, or that just goes into your coffers and that's reimbursing you that money. So it means it's taxable, it's counted as income, so it's not tax-free in that respect. Now, also, just to bear in mind, you've got about a month to go. If for any reason you have not made a claim as of yet, 2 things to remember. The last claim you're allowed to make for periods up to June expires on the 31st of July. So if you haven't made a claim and you're eligible and you meet all those conditions, then if you don't submit a claim by 31st of July, the HMRC computer will say, no, you're not going to get a penny. Other thing to bear in mind, you've also got to have made sure that effectively any new employees have got to be on furlough at the latest on the 10th of June 2020, because that's the time period that by which they've got to serve their 3-week minimum. So that's where we are up to effectively yesterday on the 30th of June. Now, just a heads up, as we go through this broadcast, obviously any comments, feedback, shove them back at me. I will break every now and again just to address comments that are coming up. If there are comments that are coming up subsequently, I'll do my level best to actually address them as well. Fantastic. I've got 3 hellos there. Jabir, good morning to you. Melanie and Hamid. So let's have a look at the next thing. So that's the first thing. You've got to be an employer. You've got to have employees. That's pretty much out in the public domain. There's been lots of good stuff printed. I'll hold my hands up to having printed and published some of that. Now let's look at what's happening in this second phase of furloughing. Now we're looking distinctively from the 1st of July up to 31st of October. So at this moment in time, after the 31st of October 2020, that's it. Furloughing based on government guidelines is stopping. There's a very slim outside chance it may resurrect itself, but the wisdom seems to be 31st of October 20, that's the last day. Claims, as you can see in the latter part of the slide, you've got until the 30th of November. Now, it's effectively as a result of lots of pressure. People weren't able to say what we have called flexible furloughing. You had a situation where somebody would say, well, actually, I've got a member of staff. It's quite a tough condition for me that, they've got to be fully on furlough. Wouldn't it be great if I could bring them back in slowly? They could work part-time, and the other period of time they could be on furlough. Now, the government have agreed, if you want, that from the 1st of July 2020, you have what's called flexible furloughing. 2 things to bear in mind. Flexibility also brings additional challenges for an employer. So we've got to make sure that we comply with this correctly. Now, remember, there's some eye-watering monies that have been already provided in terms of furloughing grants. So HMRC are also in the background waiting to do what I call compliance checks. Some compliance checks are already being done. I'm hearing through various fora that some employers, I've got no hard evidence here, are making claims without the evidence, making claims when they're not entitled to. And obviously HMRC will effectively have a look more closely. They've got the intelligence to look into that more closely later on. But let's put that to one side. Now, flexible furloughing means you can actually furlough a member of staff for 1 hour if you wish to. There is no minimum period. So you could literally have somebody on furlough for 1 hour and you can claim a grant in respect of that 1 hour. Now, the calculations, and we're going to talk about records in a moment. This means you as the employer have got to take into account 2 things. Number 1, you've got to have an idea of what's the usual regular hours your member of staff actually does. Typically, you might refer to their contracted hours. And the second thing you've got to compare is how many hours they're actually doing. HMRC, by the way, will expect you to submit those 2 pieces of information, and they will expect you to have evidence to back that up. And we'll talk about evidence as we get closer to the end of this first slide. So let's recap on that one. Flexible furloughing has come into effect from the 1st of July, which means a member of staff and an employee can work for some of that time in that week or month, and they can also be furloughed for that period of time. Next thing, you've got to have an idea and have a record of what they usually work and how many hours they're being furloughed. So it's the non-working component that you're able to claim for. And 30th of November, by the way, is the final date you can actually go online. And when I say you, this is an area of support, by the way, that either you as the employer or your agent, typically your accountant, can actually do on your behalf. But you've got until the 30th of November to submit that final claim, but the claim goes up to the 31st of October 2020. I've got some good, lovely people joining me here at the moment. So morning, Nicola, Nadine, Hamid, we said hello to, Melanie and Jabir. Nice early starter. So let's carry on with the presentation. Now, good to know. Now, I'm not being a doom merchant here. I'm not part of the fun police saying, records, but you've got to bear in mind that all the government support that's going out there, it works very much like most tax systems are doing. What this says is the taxpayer, the employer, whoever, submits a claim to HMRC. They do what they call self-assess it. They say, based on the information I've got, the evidence. I'm basing my understanding of the rules. This is the claim I'm submitting. That's the self-assessment part. The other part goes, HMRC then reserve the right to say, okay, let's look at your claim. We're going to cross-reference that. And then we are going to either do something to follow that up because there's something quite unusual, because it might not stack with the records that we've got for you as an employer, you as a taxpayer, and therefore we might need more information. They might also, they will do random checks, sample checks, just to make sure that you've actually gone through the compliance aspect. So this is not just getting a spreadsheet out and doing the number crunching. This is making sure you've gone through the right procedures. So records kept typically would be, do you have a log and evidence recording the number of hours that your employees are working? Do you have a log or evidence of how many hours they're supposed to work? How have you reached your calculations? Now, I know timesheets probably seem like something that we do in manufacturing. If you don't have a time clock, those old-fashioned clock cards, my advice would be check the contracts. You know when somebody reports to work. You know when somebody takes lunch breaks, or you should do. You know when somebody is actually finishing the day. So even if you just keep a very basic spreadsheet mapped up with your diary by employee, then you should be okay. And that will be good evidence there as well. You might also want to think about, if you want a real belt and braces thing, is to get the employee to sign that off at the end of the week. I know it sounds very draconian, but what you don't want is to end up paying money back there as well. And HMRC will say, can you prove to us that this is going on? Other thing, remember, it's any claim that you've made up to the end of June effectively that covers that period. You can't have new employees coming to that scheme. Now, what this means is that if for any reason you say from the 1st of July, I need to furlough Mr. X or Mrs. Y, and they've not previously been furloughed, you can't include them in the claim. Number 3, and I have come across anecdotally, I would admit to, is you can't just impose furloughing on a member of staff. You can't just say, look, times are tough, we've got to cut our cloth accordingly, so you are on furlough. It's got to be by agreement. So the full remit of contractual HR law kicks in, which means that if they have a contract of employment, which everybody pretty much should do, then effectively you've got to agree with the employee that they're happy to receive a reduction in pay. You've got to also, and I would suggest that you do this, if have on file the letters that you sent out as the employer, advising them of what's going on, and that's pre and post 30th of June 2020. And there's got to be an acknowledgement coming back that the employee actually agrees and undertakes that. Remember, full contractual and legal rights are not waived, so there's got to be an agreement. Now, the claim limit, I think this will apply typically if you've done what I call like a rotation or a shift pattern here. So if you've submitted a claim for a period and you've got a certain number of employees in that, you've then done a second claim in the next 3-week cycle, and you've included individuals, the claim is limited to the effectively a maximum number. Now, I'm just going to pause at this, and great question here. I'm just going to pull this up so everyone can see that. So Nadine's asked, what if they don't want to receive reduced pay? And that's a great question. Well, then you've got a situation on your hands, potentially a challenging conversation to discuss with them. They can refuse to accept that reduction of pay. What you as an employer will then have to consider is, okay, what do I do? Do I actually say, well, unfortunately, economically, I can't do that. So is there a potential redundancy situation? You can't abandon that. So effectively, you need to go through that procedure. But remember, the employee reserves the right to say no. My experience has been, for most employers who are involved in this situation here, I know some employers, by the way, that still give the full level of pay. I know some employers that have reached agreement. If you've got the environment there, if you've got that culture there, my instinct would be that most employees would agree to it. Bear in mind, by the way, with furloughing, the employee pre-30th of June was not allowed to work for you, but they could work elsewhere. Post 30th of June, that employee, if they're on furlough, still can't work for you in that furloughed time element, but they can work for somebody else. So Nadina, I hope that answers your question. If they don't, well, I suppose like any employment situation, what do you do if you want to achieve something and your employee who's got protection says no? Have the conversation, make them aware, communicate, and I would imagine that would overcome most objections. And remember that the stark alternative is if the employee says, no, I'm not going to accept a reduction in pay, no, I'm not going to do this, then if it really gets to an impasse situation, if it really gets to a we can't progress from this part, then you've got an interesting conversation which potentially redundancy will rear its head. Let's go back here. Now, in terms of the claim, if you notice here, I factored in a number of percentages there. So remember, now for that, let's talk about the money, okay, which obviously is one of the things that we're interested in. So first of all, for July, there's actually no change at all. So what the claim is that per employee, the calculation goes as follows. You calculate the regular pay. That regular pay is effectively based on what they would have been earning on an average basis, if they're fixed or variable. Again, I'll drop a link later on to remind you about some of those calculations. You can then make a claim. The cap is 2.5 grand. The average claim, by the way, per employer, I should say, has been published by the Office for Budget Responsibility at about £1,200. But per employee, the maximum grant you can claim is 2.5 grand. So it goes regular salary times 80%, and it's that or 2.5 grand, whichever is the lowest is the claim. You can also claim the related employer's national insurance on top of it, and you can also claim the pension contribution as an employer, and it's restricted to 3%. So that doesn't change at all. When we move to August, the employer can still claim the 80% as per normal, but this time you will not be able to claim for any related national insurance contributions as the employer, and you will not be able to claim for any related pension contributions. If you do try and do that, we haven't seen the claim form as of yet for August, but the computer program should be structured to reject it. Obviously, don't make those mistakes by accidentally putting NIC or pension within the salary. So it's only salary claim only. When we move to September, what will happen? Now, important to bear this in mind. Let's assume the regular salary is £1,000. Let's assume on that basis then 80%, £800 is that figure that you can claim by way of grants. Now, two things to bear in mind. One, there's nothing to stop you giving that full 100%, but if you only want to effectively pay the 80%, when you move to September, the employee must still receive that £800. This time, though, the government expect the employer to pay 10% of that, and the government will give you 70%. So the employee will still get 80% of their regular salary, subject to the cap, but you, as the employer, have to step forward and contribute 10% of that figure. When we get to October, same principle. If we take £1,000 as the regular salary, the employee will still be entitled to £800. If you pay below that, by the way, then you've invalidated the whole furlough scheme. But £800, of which the government will contribute 60% of that figure, and you contribute 20% of that. And again, it's salary only, no NIC, no pension contributions. I've got a question here from Vinay. I'm just going to put it up onto the screen. And it says as follows. What if I took a reduced income over the 3 months? Is this a better option? Now, Vinny, can I just clarify a couple of points? Is this you as a director of a company and you're looking in terms of the furlough claim in respect of yourself? On the grounds, if that's the case, two things. Remember the income over the 3 months. Remember the salary that on which you're basing the furlough claim has already been fixed effectively by the 19th of March. So whatever you pay yourself, in reality, after the 19th of March, is largely, I wouldn't say irrelevant, for the purpose of the furlough grant claim, is going to be based on what the earnings were up to the 19th of March. Whatever you pay yourself subsequently, as long as you pay that bare 80%, you will be entitled. So hopefully that's answered your question. If not, drop it into the comments field and we'll come back to it later on. So that, ladies and gentlemen, is the furlough claim here. There is guidance published on HMRC. We're going to do probably another sharing blog on this one itself. So I've not quite got every single nuance of the HMRC guidance in my brain, but it sometimes feels like that. Now that's for an employer. And remember, as an employer, that relates to a charity, that relates to a private company, and that relates to a sole trader as well. Anybody can be an employer. An individual can be an employer. A company can be an employer, a charity can be an employer, a partnership can be an employer. So obviously, if you're only using freelancers, by the way, freelancers don't count as employees. So that normal situation of what do we mean by an employee comes into effect. Now that's one dramatic change on furloughing. As a sum up, a takeaway, records, calculations. If you've got spreadsheets already that have calculated up to June, you'll need to adapt them to include the columns of furloughed hours, regular hours, hours actually worked. And again, just as a reminder, the salary calculation, as we said, as at effectively Feb 20 brackets 19th of March. If you're on fixed pay, that's straightforward. If it's variable, you take the average. So there are a number of mechanisms that exist. Now, the next and last slide we're going to look at is coming to self-employed. Few things to reinforce, by the way. When the self-employed grant first came out, there was quite a lot of confusion, quite understandably, because when we use the phrase self-employed, which I use quite often, self-employed, generally speaking or technically speaking, refers to somebody who's their own boss. So you give yourself your own instructions, you give yourself your own directions. So if you are a business owner, whether that's through a limited company or a sole trader or a partnership, then you are self-employed. However, when it comes to the money, the grant side of things, HMRC take a particular definition of self-employed. And it's effectively, when you complete a personal tax return, is there a section in there that's got self-employed part of it? If it is, that's fine. If you're a sole trader or a partnership, you're self-employed. So limited companies, unfortunately, it's out the window. Now, the conditions still apply. And those conditions are that your profits from self-employment mustn't exceed £50,000 a year. Obviously, it's a great situation to have, but if your profits from self-employment are in excess of 50,000, you don't meet the condition. Income mix. So you could be a sole trader, self-employed, that's got a self-employed business, but you've also got additional income from elsewhere. So you might have rental property. You may have a part-time job if you can find the time. And what it says, if you look at the overall income, if your self-employed profits are not at least 50% of that, then you won't be eligible. The start date, you've got to be self-employed, by the way, in the 18-19 tax year. So if you've started self-employment after that period of time, unfortunately, you're not going to be eligible for the claim. And in all of this thing here, there are winners and there are losers. That's unfortunate, but that's unfortunately what's happened. And obviously, you've got to be self-employed. More conditions. You've got to have submitted an 18-19 tax return, and you've got to have submitted it, so it's probably a bit historical, by the 23rd of April 2020. Other thing to bear in mind, by the way, for when it comes to the calculations, is if for any reason you need to amend your tax return, because there may be costs that you've missed out, or because something's gone wrong, you need to amend it, then it will make no difference for the grant claim, because the grant claim will be based on what HMRC have already got. Other conditions, and it's the last one here, which I think it really adds to this spice. You've got to have traded in the year 1920. And 1920, in dates, is between the 6th of April 2019 and the 5th of April 2020. If you've traded in that period of time, you tick the second box. Now, box number 3, you've got to be intending to trade also as self-employed in the year 2021. So understandably, if you've not been running your self-employed business, if you've been on lockdown, then, and you haven't really engaged with clients, but you haven't actually traded yet, that's fine, but you've got to be intending to trade during 2021. Now, the fourth one I think is quite interesting, as all of it is to me, probably quite sad, is a key condition is your business has got to be adversely affected by the coronavirus. Now, what that means is adversely affected. I'm going to expand on that on the next point. It doesn't mean suddenly you've got no income. It doesn't mean you've got no profits. Adversely affected isn't necessarily linked to income drops. So as a heads up at this stage, it could be you've had to invest in PPE equipment. It could be you've had to invest in additional ways of working to cope with the regulations and the guidance. There are other conditions as well, but again, it's evidence that you need. You can't just say, well, it feels like I've been affected. So how do we get that evidence? Well, I'll address that in a few moments. But remember, critically, you sign the declaration online, you've got to be affected by the coronavirus, or your business has. Now, here's what some of the ways that HMRC have interpreted adverse effects. So has your turnover suffered a reduction? Have you lost clients? Clients that might be coming on board, you've now lost. Again, you'll have email exchanges. You'll have your own record keeping system. You'll have your diary. Can you point to something that says, actually, if coronavirus hadn't happened, and this is the way that I would look at it, if I considered where I would be if it wasn't for coronavirus, and I can support that, and I look at where I am now, compare and contrast. Have you taken out any coronavirus loans? So like the bounce back loan, the BBIL loan. If you've taken one of those out, that is evidence to support the notion that you've been adversely affected by the coronavirus. Obviously, if you've used some of those funds, that even reinforces it even better. And while we're talking about loans, a little bit of a side discretion, my advice to clients and everybody else is I don't normally recommend people to take out debt to begin with if they can avoid it. However, the bounce back loan is, as it implies, it is a fantastic product. And what this is you can borrow minimum 2,000, maximum 50,000. It's linked to 25% of your turnover effectively as of December 2019. You can borrow that. There is no financial obligation placed on you for the first 12 months. So you can decide you don't have to pay anything back. There's no interest charges. It's there. If after 12 months you don't want to pay that money back, then you pay interest at 2.5%. If you want to settle early, then there's no penalty charges either. Now, the reason why I think it's a positive thing, and I've done that for myself, I'll share that with you, is because look at it like an investment pot that you've got there, because we don't know what customer behavior is going to be fully like after life gets back to some degree of normality. There might be opportunities and things that we need to invest in, and we've got cash there that we can dip into. And cash, for me, is always the name of the game. Other things, has your business closed? If so, make sure you've got a record there somewhere. Don't rely on your memory. If it's anything like mine, you will not be able to remember exactly what's going on by dates. Make a record, put it in a diary, put it in a note of some description. If your staff haven't been working, so if you've obviously been furloughing them, that's evidence that you've been adversely affected. My thought processes and all of these things, just imagine you're going to be investigated and audited. Could you validate and back up what your claim is? Now, there are two time frames here for the claim. Now, there's a first claim. So having met all those conditions, if you're self-employed, you've got until the 13th of July 2020 to make that claim. If you don't claim by then, you've lost it. Tough. And remember, you've got to be adversely affected by coronavirus up to that date. You've got to make the claim by that date. If you don't, you'll lose it. Claim number 2, and the claim portal, to give it a posh word, will be open round about August 2020. And that's saying 13th of July onwards, is your business affected adversely by coronavirus? Having that obviously all the other conditions. If the answer is yes, you're eligible to make a second claim. Now, the calculations are as follows. It's very similar to the furlough claim. So what they do, they take an average of your profits for 18-19, or if you've been in business a bit longer, they'll on average 3 years out, and they'll work out the average annual profit, convert that to 3 months, and pre 13th of July, it would have been 80% of that figure, up to a cap of 7.5 grand. After the 13th of July, it's the same calculation, average profits times 70%, convert that into 3 months, and that's your claim. You get that as one lump, by the way. The maximum cap is 6750. Now, as a ready reckoner, by the way, if you don't want to go through all that process, there's a very quick calculation that you can do. So, e.g., my self-employed profits, let's say for argument's sake, are £10,000 a year. £10,000 a year, all the other conditions have been met. The claim one, 20% of that is my grant claim. After the 13th of July, it actually works out to be 17.5%. So I'll go from 2 grand, claim one, to 1750 for claim number 2. And surprisingly, even one or two of my own clients here haven't yet made the claim. Agents, by the way, cannot step in and make the claim for you. It's you as the individual self-employed person are the one who has to complete the claim. Now, I had a couple more bits here. Now, other things as well. Usual thing, evidence to back it up, as we said. The grant is taxable. Don't get over obsessed by this, by the way. So the grant is taxable, but you will not pay the tax connected to that grant, if there is any due, until January 2022. So it's a long way away. I would, personally speaking, if it were me, maybe not right now, is once things settle, you've got the grant, work your taxes out pretty quickly, put that money aside. Now, watch out for scammers. I'm going to talk about the reviews, by the way. If for any reason, and we've had a couple of clients who've been rejected here for some strange reason, we've stepped in. We are, as an agent, we are allowed to help the taxpayer with any appeals. So that's fine. The agents, by the way, cannot make the claim on behalf of the self-employed person. If you do, a fraud alert will be triggered, and there's going to be big problems there. So you cannot make the claim on behalf of a self-employed member. Self-employed people, do it yourself. The good thing is, by the way, if you're self-employed, you don't have to worry about finding out the information. HMRC have already got that information on file. If you filed your tax returns, they've got the information. There's nothing for you to do. If you don't agree with them figures, you, as the agent, your agents can step in and appeal on your behalf. Now, the last thing, unfortunately, in all this turbulence that's going on, there are some very unethical people who are scammers. So if any of you ever get a link, whether it's self-employed or furloughing, saying, click this link to apply, basically just delete it, report it to maybe the fraud department, because it's rubbish. HMRC will not let you do that. There's a portal. You've got to go on. You can check eligibility. You make the claim online. It's all very secure. So just watch out for scammers, by the way, who basically have got no real ethical guidelines. That, ladies and gentlemen, is where I'm about to wrap it up. So I hope you found this useful. If you've got any comments, this is my first foray into LinkedIn Live. Joe, good morning to you. So Joe's my business partner down there. We're about to launch something fantastic, which we're going to talk about later today. So I hope you've got some value from this broadcast. Any comments, good, bad, indifferent, thumbs up, thumbs down, chuck them into the box. Apart from that, everybody, have a fantastic rest of the day, rest of the week, and I'll be back broadcasting before you know it. And let's play out. Let's remove that. Let's remove